China's economic recovery slowed significantly in the second quarter amid rising prices and cooling manufacturing activity. GDP numbers showed 7.9% growth, a huge fall from the previous quarter. So what does this mean for the future of China's economy? Michelle Hennessy brings us this analysis.
As the Communist Party celebrated its centenary this month, President Xi Jinping touted its economic prowess. He called the march towards China's great rejuvenation unstoppable, as economists predict the country is on course to become the world's largest economy.
We are now striding towards the second centenary goal of building a socialist, modern and powerful country.
But there has been recent signs of a slowdown that might complicate China's plans. The manufacturing sector is contending with higher raw material costs and supply shortages, while pockets of COVID-19 have put pressure on consumer demand. The central bank's decision to cut the amount of cash banks have to hold as reserves has further fueled concerns of slowing growth. But closely watched numbers released this week suggest the economic march forward is on track. GDP growth came in at 7.9% for the second quarter. That may look like a significant fall from the 18.3% expansion in the previous quarter, but economists say that difference is skewed by the COVID-19 pandemic, and some believe calling it a slowdown would be premature.
So one thing that we need to understand is that the dramatic drop in GDP, year-on-year GDP growth is because of the dramatic change in base last year. So if we strip out the base effects, actually the 2-year compound annual growth rate in China rose to 5.5% in the second quarter from 5% in the first quarter. So in a way, it shows that China's GDP growth remains quite strong.
Its economy is also becoming more balanced.
Retail sales and investment by manufacturers improved in June. Those increases point to China's economic growth becoming more broad-based and less reliant on exports and a hot property market.
Analysts say China overtaking the US as the world's largest economy is still a question of when, not if.
The US economy can't really grow in a sustained way without generating inflation by more than about 2.5%. China can grow at 6-7% without, on a sustained basis, without generating inflation. And there is, while we're seeing a slowdown from the 10% plus growth period of the 30 years leading up to 2012, is that certainly sort of just the mathematics of it says that, over the course of the next few years, maybe next couple of decades, the Chinese economy will surpass that of the US.
Economists predict 8.6% growth in China's GDP for all of 2021. That would be the highest in a decade, and it suggests Xi is well on his way to leading China to the front of the economic power structure. Michelle Hennessy, TRT World, Hong Kong.